At Farms.com Risk Management, we understand that commodity price risk management and sound financial advice are essential in today's volatile crop and swine sectors. Visit our website at www.riskmanagement.farms.com.
Welcome to the Farms.com weekly hog report. This is Moe Agostino, managing commodity strategist with Farms.com Risk Management, where we provide simple answers, smart solutions, and great results. Well, on June 22nd, the USDA came out with their cold storage report. You can see here the yellow 2010 is lower than in the last 4 or 5 years. If this trend continues, we'll probably see a record low in next month's cold storage report. We've got red meat and supplies and freezers down 4% from the previous month and down 18% from last year. Frozen pork supplies are down 7% from the previous month and down 23% from last year. And frozen pork bellies down 12% from last month and down 44% from last year. In the USDA hog and pig report that was released just recently here around 3 Eastern, 2 Central, most of these numbers came in within expectations. This was the range here. The market in the March 1 quarterly hog and pig report actually sold off into that report. In this case, the market actually gained into this report. So I think the market will view this report as neutral, as the market has already factored in news from Monday's trading session. So we've got U.S. inventory of all hogs and pigs on June 1st, 2010 was 64.4 million head, down 4% from June 1 of 2009, up 1% from March 1st of 2010. This compares with expectations of a minus 3.9, so that was in line. Breeding inventory 5.79 million head, down 3% from last year and up slightly from previous quarter. This compares to a minus 3.5, so a little bit worse than expected. The market hog inventory 58.6 million, down 4% from last year and up 1% from last quarter, compared to expectations minus 3, so a little bit better there. Productivity gains came in at 102, so a little bit better than expected. This is going to mask some of those declines in breeding inventories. Sow slaughter has slowed since futures have gained. The cure for high prices is high prices, and you can see from here the pork carcass cutout value that we peaked early here, took off, went here, and we've kind of stalled since. 90 is quite high for any given year, whether it's this year or 2004 when China was buying pork for the Olympics. So I think it's over. As the back-end months have gained at some time, they've gained more confidence in this decline in the inventory. This is the breeding herd here, so decline since 2007. Sow slaughter, you can see here we've slowly come down, but kind of trickling, kind of going sideways from here on in. Inspected slaughter, lows are usually through July 5th, and from there on in you get that seasonal bounce. We still expect that to happen. Hog weights have been kind of a little bit but equal to that of 2009. We're not having the cool, wet spring, summer that we had last year, so probably going to see higher hog weights into 2010. This is the July daily. You can see we peaked here, came down here, recovered, looking like 82's resistance, and the next one's 84. I'm not sure. We're going to run out of time. I'm not sure we're going to retest that high. The only one that actually got to 90 was May. But if you want to sell cash in the summer months, I don't think there's a lot of risk there. You'll still get some good prices. This is a weekly chart on July. You can see resistance at 82 and then 90. But 82 is still very high. Not sure we'll get to 90. That will largely depend on the consumer, this global economy, both domestic and export demand. Until next time, thanks for watching. Have a great weekend.